The news day continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. The International Monetary Fund, or IMF, says the Israel-Hamas conflict threatens to darken an already murky global economic outlook. The IMF Managing Director Kristalina Georgieva assures they are closely monitoring the situation and how it may affect oil markets. Georgieva says the IMF has noted fluctuations in oil prices, but it is too soon to predict the economic impact. Back in Manila, former presidential advisor for entrepreneurship and Go Negocio founder Joey Concepcion says the conflict will not push prices of daily commodities. However, Concepcion says that global oil prices are at risk, just as the IMF has warned.
We have seen some up and down of oil prices. We have seen some reaction on markets. And as I said, we will be closely monitoring this. Very, very clearly, this is a new cloud on not the sunniest horizon for the world economy.
Back on the home front, one analyst says further rate hikes by the Bangko Sentral may only have limited impact on inflation. ING Bank senior economist Nicky Mapa told Business World that rate hikes would likely slow economic growth. This comes after BSP Governor Eli Remolona announced that a 25 basis point policy increase is being considered for next month's Monetary Board meeting. A central bank has so far kept key interest rates paused at 6.25% at its last 4 meetings. Both the NEDA and Finance Department have also earlier spoke against further monetary tightening following September's 6.1% inflation print. Let's get more of his insights. Joining us on the program is ING Bank senior economist Nicky Mapa. Thank you very much for joining us this morning.
Good morning, Diego, and thanks for having me.
Okay, let's get right to it. Let's start with the ongoing conflict between Israel and Hamas. Now, the IMF is saying it's darkening the economic outlook. But do you really agree with Go Negocio founder Joey Concepcion that this will have minimum impact on commodity prices?
I think on commodity prices, that's where the impact will be felt, especially with where we're seeing the move in crude oil prices. That sort of conflict escalates, or if it is prolonged, then that might have a lasting impact on crude oil prices, which, of course, is very important for the Philippines, given we import most of our energy.
Yes, you mentioned crude oil prices. Moody's Analytics also quoted that a global recession, if crude oil prices increase to more than $90 per barrel. Now, is this something you see happening in light of this conflict that's going on?
Well, very difficult to say given the nature of it's a geopolitical risk out there. So it's very difficult to see where oil prices are. But I guess to their point, if oil prices stay at these levels, that won't be good for growth. Secondly, in terms of the global growth dynamic, if oil prices stay at those levels, that might force central banks to stay or to keep rates at these restrictive levels for much longer, or may even be forced to increase them further. So that's not good for growth either.
Okay, the Oil Management Bureau has said that the risk will be present once Iran is dragged into the conflict. Now, why is that so, and how big of an impact will this possibly entail in the oil market?
Well, hopefully that doesn't happen. But I mean, if this does sort of escalate and we start to see other countries coming in, that might cause disruptions in terms of supply because of the concern that might arise from conflicts spilling out to other countries as well. Most of the oil comes from that area of the world. So yeah, that will definitely have lasting, or I wouldn't say lasting, but a substantial impact on global commodity prices. And, very important for countries like the Philippines that import.
Okay, I don't know if you've heard, but the Federation of Filipino-Chinese Chamber of Commerce fears that this might also have an impact on business sentiment, likening it to the Russia-Ukraine war. Now, your thoughts on that?
Yeah, I guess the concerns are founded. If this escalates or this spreads to other countries, keeps oil prices high, that will have impact on our inflation, both from the direct impact as well as the secondary impact when you see those high oil prices and higher utility prices feeding through the rest of the CPI basket. So all in all, I mean, it's not going to be good for growth. And I think, the IMF sounding off on that is just, they got it right on the head.
All right. Now let's talk about the possible rate hikes. Inflation surged to 6.1 in September, but you warned that further tightening could hurt economic growth. Could you elaborate on that more?
Yeah, well, rate hikes are designed, by design, are intended to slow growth, and that's how we get to slower inflation if you're using the monetary side to address price pressure. So it comes as no surprise, it's hard to deny that when you hike interest rates, you're actually trying to slow the economy down
Okay.
to lower the temperature with inflation. So with the rates at 6.25 now, and if they move north or even higher to 6.75 or 7%, that's definitely going to hurt growth, not just now, but like down the line. And that's my bigger concern, is that the impact of the previous rate hikes haven't even been felt yet, and we're already tacking on, or we might be tacking on even more rate hikes. That's definitely going to be slowing growth next year and maybe even the year after that.
You're speaking about rate hikes now. What would be then your inflation forecast for the year if rate hikes are implemented?
I don't think it changes much. I'm at 6.1% now for this year. Next year is a big question mark, but I see it drifting closer to 4%, largely because interest rate hikes aren't designed to address this type of inflation. This type of inflation is really cost push or largely cost push oriented. And therefore, if you're not addressing the issues on the supply side, you can be hiking and hiking, but you aren't taking care of the symptoms. And we could still see inflation elevated next year. So
Okay.
yeah, that's a big concern for us.
How about growth? Is 6 to 7% still achievable? And what is your forecast for the year?
Unfortunately, we see growth slipping this year and next year.
Oh, okay.
We had actually expected growth to slide below 5%
Also, below
for
5%.
2023.
Below 5%. Okay.
Yeah, below 5% for this year, next year.
Okay, okay. Well, we'll surely keep an eye on that, and thank you very much for all your insights. But unfortunately, that's all the time we have for now. Thank you for joining
Sure.
us this morning. ING Bank Senior Economist Nicky Mapa.
Have a good day.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. The Securities and Exchange Commission is open to amending its proposed increase in fees and charges. This comes after the SEC met with two business groups to discuss the controversial plans to raise fees. The Commission explains that they publicized the drafts to elicit suggestions and comments from all sides. The SEC also clarifies that the fee increase is just a proposal and that they are still focused on their amnesty program for corporations, which ends on November 6. The Sugar Regulatory Administration will postpone the release of imported sugar to stabilize declining farmgate prices as a relief to farmers. Last September, Sugar Order Number 7 authorized the importation of 150,000 metric tons of raw sugar. The SRA decided to keep the imported sugar as a 2-month buffer stock. Reclassification applications will also be suspended until farmgate prices stabilize. Sugar traders have until October 15 to distribute their stock. The agency maintained that this is necessary to regulate supply and ensure fair prices for both farmers and consumers. This after oversupply caused a decline in prices during the first 2 weeks of the sugar trading period. This decline in farmgate prices, however, was not felt by consumers, as sugar still costs as much as 110 pesos a kilo.
The farmers are usually blamed kasi for the high retail prices, but everything in between has no government control. Somebody is profiteering somewhere.
And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News, all sides, all the time.